Welcome to the Sharkpreneur podcast with Kevin Harrington and Seth Greene. Kevin Harrington is the inventor of the infomercial, one of the original sharks from the hit TV show Shark Tank, and has generated over $5 billion in TV and digital direct response sales. Seth Greene is the world's first trusted authority on cutting-edge direct response marketing, a best-selling author, and the only 3-time Marketer of the Year nominee. On the podcast, Kevin and Seth interview sharkpreneurs who share straight talk on what it takes to explode your business.
49 faces looked to him in triumph. Over the last 12 months, they had each taken turns and promoted his business for a week at a time, driving over $987,342 in revenue. What if you had a network of 50 centers of influence who promoted your business every week for a year? Grab your copy of the #1 Amazon best-selling book, The Ultimate Guide to Growing Your Business with a Podcast, at 33% off the Amazon price by going to ultimatepodcastbook.com. Again, that website for 33% off the Amazon price is ultimatepodcastbook.com. Welcome to the podcast. This is your host, Seth Greene. Today, I have the good fortune to be with William Huston from Bay Street Hospitality, a global investment platform comprising a series of hospitality-focused funds, each designed to deliver quantum mental exposure across 6 targeted marketing strategies. William, thanks so much for joining us.
Of course. Great to see you.
Great to have you. Let's go back in time a little bit. How did you and Bay Street get started?
Sure. So it's too long a story for a podcast, but basically I was at Georgia Tech. My father became disabled. In Georgia, if you work for a year, you get in-state tuition. So I started a business to pay for school, I started that business after reading the book 4-Hour Work Week, and I settled on opening a call center in the Philippines. About 10 years into that, we were calling for the federal government, doing marketing services for federal employees that were retiring. And if you've read that book, Who Moved My Cheese, we realized how well we were doing for some of the businesses that we represented. And so we decided to start a wealth management business. Fast forward another 6 or 7 years, I became interested in hospitality. My son and I listened to a lot of Audible books, and we just finished a book called The Green Ember, if you've ever heard of it. It's a story about rabbits and swords, this sort of thing. And one of my favorite quotes from it, said, one must either sacrifice for great accomplishment, or they must sacrifice great accomplishment, And that's something that I've seen in entrepreneurship. It's a lot of give and take. It's a lot of highs and lows. But with hospitality in particular, I found a true sense of passion behind it. My father was a pilot, and he used to say, I fly like I breathe. It's natural to me, And in my business, as I mentioned, I started a business to pay for school, and then I switched to wealth management because it seemed like that's where the money was. But with hospitality, I really saw that I could express my worldview through an investment thesis. By working with operators and developers and asset owners that wanted to express, a high quality of hospitality, a high quality of making people feel welcome. There's another book by a gentleman, Will Guidara, called Unreasonable Hospitality, where he talks about replicating certain systems so that these experiences, they can be perceived as a one-of-one experience. And I really realized through my entrepreneurial journey, setting up first with the call center that was pure systems based, then getting into wealth management, which is a commodity, except for the service that you provide to your client base. And then transitioning into hospitality, where I can apply sort of this systems driven approach to investing in the best operators, asset owners, and developers, is how I got to where I am today. Yeah.
Well, we appreciate that. I'm sure the longer version of that could probably be in a book somewhere if it isn't already. Sure. Talk a little bit about how we're not obviously making any investment recommendations on today's podcast. That's our legal disclaimer. But how does Bay Street work in terms of what are the 6 targeted sectors that the different funds are in?
Yeah. So instead of speaking about sectors, we only do hospitality. So that's the sector. I think maybe what was meant by that word is maybe regions that we find interesting.
Yes, thank you.
Sure. We and globally, there's lots of different drivers that will move hospitality that are unique, So take, for example, in Hong Kong right now, student housing is the driver, right? So there's 180,000 students per year that are going to university in Hong Kong. That number has drastically increased with all of the tension between China and the US. So mainland students are now going to Hong Kong for the universities that are there. But there's only about 80, 90,000 dorm rooms, right? So you've got this $90,000 supply gap, right? And you have an increasing demand that is not going to shrink anytime soon. So the strategy in Hong Kong is to acquire commercial or older hotels, work in tandem with the universities, with the governments that own some of these vocational training colleges, and add a couple of floors for student housing. Very, very straightforward play. Put 3 or 4 beds in a room, and the students pay about 800, 900 Hong Kong dollars per bed, right? So it's a pretty straightforward strategy. In India, the opportunity is vast. There's 2 billion tourists a year in India. Only 9 million of those 2 billion are foreign arrivals. So the majority of tourism in India is happening within Indian citizens themselves that are traveling once and a half, per citizen per year, 1.4 billion people, right? From a branding standpoint, in the US, 72% of hotels are branded. And what I mean by that, they're operated by Hyatt, Hilton, Marriott, Wyndham, right? In India, it's only 4%. So again, you have huge runway to work with the local operators that are there that have you could say a good handle on the local Indian market. Yeah. In Australia, the Olympics are coming in 2032. So this is a purely sort of time-driven strategy where you want to understand how can you take a 2-week event and make all of the construction that needs to happen ahead of that time pencil out, right? What happens after the Olympics are over? How do you make this viable? What do you do with the Olympic Village? How much of that should be branded residences? How much of it should be apartments? How much of it should remain hospitality, like hotels? And I could go on and on, but I think I gave 3 out of 6 examples. And so all that is driven by that quantimental strategy that you referred to earlier. Bay Street Capital Holdings was a quant strategy that we were running in the public markets. And then we took that strategy and started applying it to the hospitality space. Yeah.
Those are fascinating examples. How are you coming up with the thesis? How are you sourcing deal flow? How do you have boots on the ground all over the world? Tell me more about the process.
Sure. So you could say it's a 3-step process. But the first part of it is the answer to your question, which is the quant side, right? So we ingest a lot of macro data. You're trying to figure out what's the signal versus the noise. And, you're looking at everything from number of new airports that are being built, number of new tourist arrival. Now, when I say number, I think even more important is the change in, so like the delta between the number of new tourists this year, last year, 5-year, 10-year, right? The change in the average daily rate, 1 year, 5-year, 3-year, 10-year, like that. The change in occupancy over these markets. But we also look at what we consider pretty interesting metrics that wouldn't necessarily pop up for someone who's just running a real estate fund or just like running a PE fund, for example. We look at things like changes in temperature. We look at things like change in demographics in terms of moving patterns of people. We look at things like number of engineers that are in political decision-making positions versus the number of attorneys, because lawyers tend to drag projects out, believe it or not, if you look at this from like a government standpoint. We look at the success rate on large infrastructure projects. We look at foreign direct investment inflows and outflows. And then from there, once we identify these regions that have some blip, like I gave earlier with like number of new students coming in or number of local tourists that are not relying on external tourists to come into their market, or some time-driven event that's going to happen in the future that's going to be backed by several $billion of government funding for infrastructure. The next thing you do, phase 2, is you start working with the local governments and you see which one of these regions are motivated to have foreign direct investment come in, right? So, and believe it or not, that's not as obvious as sort of like identifying a good region. So we could use like Portugal, for example. We were really interested in Portugal back in like 2017, 2018, before the Golden Visa program was popular, because back then we sort of had this thesis that the 4 to 5 star space had room to run. What they call 4 and 5 star in Portugal, from a quality standpoint, was a bit different than sort of what we felt was sort of like the expected standard. But we found it quite difficult for our organization to make progress in Portugal, right? So that's not the case that if you would have done it, you maybe would have had a great experience. But for us, we didn't really have a competitive advantage that we could curate through these government partnerships in Portugal, despite going back and forth a couple of times and really trying to like iron it out. So the competitive advantage, once you've identified the region, would be, putting these government public-private partnerships in place, making sure that you've got folks that actually want to see you come in and support these local developers, operators, and asset owners. And then from there, the introductions are actually made to these organizations through the government partners. So we don't go to a region and then say, let's try to find who's the best developer or who's the best operator. All of our deal flow is actually introductions from government counterparties that we're working with. Yeah.
That is absolutely fascinating. So, who is an ideal investor in your funds?
Somebody who likes hospitality. I think, people invest in people, so I would say somebody who likes our team, somebody who, a lot of people that I work with, they either already own single assets, things like that, or they like the idea of having a part of their portfolio in the hospitality space. I would say at the institutional level, it would be organizations that have some sort of liability matching. So say you're a pension, you've got X amount of liabilities that you have to have covered 5, 10, 15 years from now. You can actually pair, the liability from an income standpoint that you're going to have to pay to these retirees to assets that are going to be paying that income once they're finished with construction or once they're stabilized. Say you finish an asset, you need 3 or 4 years to stabilize it. So I think that's very attractive because hospitality has a higher yield than other forms of commercial real estate because it's more volatile, right? So the more risk, the more return sort of deal. But again, taking that quant approach, you can actually start to understand and measure what is the risk that I'm taking relative to this additional yield. And you can determine how efficient is that additional alpha going to be. Is it worth me pursuing this other market, or is it not worth my time? So from an institutional standpoint, yeah, I think that being able to sort of actually understand the asset, hospitality is sort of tricky. Okay, so why is it volatile? There's 2 reasons. All other forms of commercial real estate, you have long contracts, so an apartment or a data center, and the daily rate's the same. So you're going to pay, $100 a day for 365 days, right? Hotels, the rate changes intraday, and you have to sell all the rooms daily, and so from a pension standpoint, that can be a massive headache. So less than 2% of institutional capital globally has the allocation's less than 2%. So when you look at the big sort of deployers of capital, less than 2% of their capital's in hospitality. For that reason, it's hard to underwrite, I think, because it's not just, what are you looking at from a pro forma or from a financial standpoint. You're trying to get to the bottom of, what's the meta story with these funds. Like, why are you spending so much money on food and beverage at the Ritz, but not at, the Four Seasons? These sorts of things, if you don't have an operator background, you're just someone, working to source managers that allocate. It's not immediately clear what you're looking at when you see the underlying numbers.
You've built something incredibly unique. You mentioned the team. Talk a little bit about them.
Team is dope. My partner is the gentleman, Tommy Lai. He was the CEO at GHM. GHM operates a brand called the Chetty. Chetty is pretty well known throughout Europe and the Middle East. A lot of landmark assets that were done in tandem with the sovereign funds in the Middle East and the families that are there, the royal families there. If you've ever heard of Amman Resorts, the Chetty and GHM used to be a part of that before it was sold. In India, we have a gentleman, Manas, who was working for the government actually for several years. So a lot of my, as I mentioned, like phase 1, 2, 3, when I was working with the government in India, Manas was my main point of contact for several years before it made sense for us to ask him to join full time. And as you said, have someone sort of boots on the ground sort of deal. We have a team of 2 in El Salvador that handle a lot of the back office type stuff. Tommy runs a team of operators. So, when you identify an asset that you're going to operate, that third party operator is managing the brand of the asset. We've got a couple of advisors. A lady, Katie Way, was one of our partners in the early years. She's now sort of transitioned to more of an advisory role. She was at AQR. She was an executive there for last 10 years. And also sold a business in India called Unifocus, is another one of our advisors. And then we've got a pretty good network of, you could call these folks, brokers, placement agents, allocators of capital that are aware of what we're doing and will, recommend folks have a conversation with us if something's interesting.
Sounds great. You've helped, you've got a global presence. You've achieved a lot of success and helped your investors do the same. What's your biggest challenge now?
Challenge. Well, I think all small businesses are challenging, right? It's like a house of cards if you're a small business building something, because back to this risk thing, you just don't have a lot of control over things that you don't have control over, right? And so I think every small business has a runway. Every small business is trying to balance, the right mix of when do you expand, when do you sort of hold back, when do you enter a new market, when do you hold back, sort of deal. So and balancing, your personal time with your family, things like this, right? So I spend a lot of my time on the road, mostly in sort of the Southeast Asia sort of region, and it's a 17-hour flight back home, so it can be challenging to be awake and fully present when everyone else is awake and fully present. But there's a lot of hacks for this. I don't drink caffeine after 2 p.m. in any time zone. I try to get a lot of sleep. I do a lot of ice bath. Believe it or not, like ice bath can really sort of nip the.
Yeah, I love my cold plunge.
Yeah, it can really nip the jet lag like as soon as you land, So yeah, a little bit of tips and tricks that I use to stay on top. But I would say my main sort of driver and sort of what energizes me on a day-to-day basis is I'm hoping that the work that I'm doing will be something that my kids find somewhat interesting, and the idea of them being able to be involved with this would be a sort of like a chapter 2, you could say, because as I referenced earlier about my father and his flying, my first asset I renovated with my dad. And that's sort of when I realized that there was such a love for creating these spaces where people felt welcome. And I have a hope that is something that my kids find interesting also.
I am sure they will. For our folks watching and listening who want to learn more, where is the best place for us to send them?
I'm kind of active on LinkedIn. So I guess that would be fine. And our website is baystreethospitality.com. So both are the easiest ways to get in touch with me.
All right. Well, this has been Seth Greene with William Huston from Bay Street Hospitality. William, thanks again for joining us.
Of course. Take it easy, man.
Thanks, everybody, for watching or listening. We'll talk to you or see you next time.
Why do so many businesses struggle while others seem to explode overnight? Do you wish you had the secret to this type of exponential growth? Now, I've scaled more than 20 businesses to over $100 million, and it's not just luck. In my new book with Mark Tim, Mentor to Millions, you'll learn the repeatable framework I use in all my business ventures for massive success. Order at kevinmentor.com and get over $1,000 in bonuses. Head to kevinmentor.com.